Good afternoon, traders. This is a live trade recap. I took one trade in the after hours. I have it on video. We're going to go over everything right now. And if you like this sort of thing, hit the like button. If you haven't subscribed already, please do so. If you'd like to become a member of the trading group, which is completely free, it's on Facebook, goes by the same name, Trading Armor. There you can download the 2R calculator, my trade tracking spreadsheet, even my trading plan. So what I was looking at this afternoon, first of all, the stock market made a pretty decent move today on all the indices. Everything was up about 1%, which is the exact opposite of yesterday. So it looked like, after a good day, we might have some energy in the after hours. So I was keeping an eye on things, but I don't normally trade the after hours. So this is an experimental trade. I did use real money, but I'm only trading one share. Whenever I take an experimental trade, if I do anything out of the ordinary of my normal trading plan or strategy, then I'm only going to trade with one share. That way it doesn't make or break my account or my day or whatever. So TDC was the top gainer. And here's the problem with trading in the after hours, and this is what you need to be very careful of. One of the best indicators of whether or not a stock is going to continue its move is volume. And if you organize the list by volume, TDC is way down here at number 16. So it looks like, and I have after hours selected, so it looks like it's not trading with any considerable volume. But this is not accurate. This shows you the volume throughout the day, including the pre-market. So this is all of the volume throughout the day. This may very well, and most likely is, the number one volume traded stock right now in the after hours, but there's really no definitive way to tell that. So if you are going to try trading in the after hours, I strongly suggest, first of all, you only trade with one share until you track at least 100 trades showing that you're profitable. The other thing is organize the list by after hours, which really is organizing the list by top gainer. So this TDC is the number one top gainer. That doesn't mean there's volume there, so you need to look at the chart and check the candles. So right now, let's go to the video. And some of these candles, I think, had like 8,000 shares on them. We're going to go over that in just a second, but I don't want to give away what happened with the trade. So let's look at the video right now. So obviously you can see that this thing was running up out of nowhere. The previous day's high was somewhere around $39. And so this thing was just shooting up out of nowhere. That's always a good sign, but doesn't mean that the trade is going to work out. So at this point, I'm just waiting for this move to finish, give me a pullback, and then I can take an entry. If the top of any one of these green candles was lower than the previous, I could enter after a new high, but that didn't happen. The closest we got was right here. These had the exact same high. So I'm looking for a candle to have a lower high at the very least in order to give me an entry. So let's see what happens. So this thing finally establishes a high of 48.23. Oh, does it? Actually, no, it went even higher, 48.80. And then here's the first pullback. So now as soon as a 1 minute candle makes a new high, I can take an entry. It doesn't matter how extended this is. According to my plan, the first pullback is always the safest entry. Then if I get faked out, I can take the next two entries. So that's one way of, dealing with, sometimes these things give just a false pullback and then they continue lower. But let's see what happened on this trade. So right now I'm hovering over this candle. The high is 48.23. So as soon as I see 48.24 or better, that's my signal to enter. So I have my hotkey set up to, you can see over here, to buy one share, because this is an experimental trade. So let's see, this moves pretty quick. There's 48.24. You can see I just triggered my hotkeys. I am now in with one share at 48.20. So obviously this thing was kind of bouncing around at that area, and I got filled a little bit lower than I wanted to, but that's fine. That's pretty close. I mean, at this price, that's barely any slippage at all. 4 cents. So that's like 0.01%, I think, on a $40 stock. So here I am using my 2R calculator. That's my actual entry, 48.20. The stop loss is always the low of 1 cent below the previous candle. That's my stop loss, 47.19. My target is $50.22. You saw the risk there was around 2%. So very low risk trade. Let's see what happens here. I'm just going to fast forward a little bit so you're going to see this play out faster than it was in real time, and try to imagine yourself in this trade in real time, what you would do if you saw the price moving the way it was. Would you get scared? Would you think that, oh, this thing's way too extended and now it's coming down below my entry? I'm just going to stop out because it's not doing what I wanted it to. I wanted it to pop and it didn't pop. These are the kind of things that new traders deal with. And this is why I'd rather just trade my plan, which is a rules-based plan. So I don't think subjectively about the trade once I'm in it. I don't even think subjectively about the trade when I'm deciding whether I'm going to get in it. It's all objective. Does it follow the ABCD pattern? Is it trading above previous highs? That kind of thing. Once the pullback has started, I get in on the first new high, even if it's just a one candle pullback. So that's it. And then I just let it play out. If it hits my stop loss, I take my stop loss. If it hits my 2R target, I let it hit that. I don't scale out. I don't try to see if it goes further. None of that stuff. I used to do all of that in the past, and I was consistently red over. I wasn't red every month, but overall I was red. So that was not a sustainable strategy. And this month, I've been trading this plan, very strictly, and I am red this month, but this month has been some of the worst trading I've seen in the entire year that I have been day trading. And as they say, trading is a marathon. It shouldn't be determined by one day, 1 week, or even 1 month. It should be determined year after year. And in the long run, are you green or not? So if we do take a red month this month, so be it. I'm going to keep doing the exact same thing over and over because I've already tested this plan with well over 100 trades, and it's proved consistently profitable. So this 1 month isn't going to detract me from trading this plan. All right, so now we're watching this in real time. Once this thing broke out through this again, this is all subjectivity. This is just things that I look at while I'm trading, but it doesn't change whether or not I let the trade play out. But it does make me feel better while I'm in the trade that this thing broke out above these previous highs. That's always a good sign. It doesn't mean that it's going to hit your target, but it becomes much more likely once that happens. So fast forwarding a little bit here. In the past, I would have been tempted to pull this down thinking, oh, it's so close to my target, and what if it doesn't, comes very close and just comes back down and stops me out? So be it. There you can see the patience paid off. It hit my target, 50.22. That's exactly what I wanted. So I actually made, even though that was an experimental trade and just one share, I actually made half of my red day back. If you watched my previous video, actually 2 videos ago, I showed my pre-market trade with ATHE, which I lost $4.32 on. That one share trade, experimental trade, made back $2 of that loss. So basically cut my red day in half. I was down about 0.64%. Now I'm down 0.34%. So not only, now that wasn't the point of the trade, don't get me wrong. The point of that trade was not to make money. It was just to collect data on after hours trading. Because if I can take 100 after hours trade and prove that I'm profitable with this system, then I will start trading in the after hours as well as the pre-market. But I need the data to tell me that, because obviously after hours trading is a little bit of a different beast, because a big part of my trading is the volume, and I can't really tell if there's volume. You can go candle by candle. Let me show you that right now and check the volume, but you still don't know if it is the #1 volume traded stock or even the top 3 volume traded stock, and that is an essential part of my plan when I trade the pre-market. So here we had about 500 shares, 3,000, 900, 8,000. So the volume's picking up. That's always a good sign. Looks like the peak was near the top, 21,000 shares here at the top, and then it started to pull back. And that's not uncommon to see. When you see that volume spike, that is often, not always, often a sign of a reversal starting. And there you can see it pulled back, but then took off and hit my profit target. It's continuing on higher. That's great. I don't really care. I got my profit target. I'm an all or nothing 2R trader, and that's all I care about. So anyway, hopefully you guys learned from this video, and the main idea I want to get across here is if you're going to do any trading that is any way, shape, or form outside of your ordinary plan or strategy, just do it with one share. That way, if the trade goes against you, it doesn't make or break your day, your week, your month, or whatever. So, and no matter what, always have a stop loss in mind before you enter the trade. If you get hit, just take it. If your profit target gets hit, if you're lucky enough, take that as well. Don't scale out. It's not gonna pay off in the long run. I actually, right here, you can see if I would have scaled out of this trade. Let's see if it took the if I say I had multiple shares and I took half of my shares off at this point, and then I followed the bottom of these 1 minute candles, I actually would have sold the rest of the shares about 20 cents per share less. When this actually, sorry, it would be the low of this candle, which was 50.10. So about 12 cents per share less on the scaling out. So I would have made more selling all my shares at my profit target as I did. So that's why I don't really care to scale out. So, but that's up to you. If you're going to do that, just track it 100 times. Compare it to if you didn't scale out, if you just took your 2-hour target or 1-hour target or 3-hour target, whatever you decide. And then if you find out that, hey, after 100 trades, I would have been more profitable just sticking to my original target, then that's probably what you should do over scaling out. So plus scaling out is more stressful. There's, once you do it, you'll know what happens. All right, guys, take care. No matter what, always take your stop loss, honor your profit target, and in the long run, you should be green. Have a good night.